Hello students, today we are going to practice few questions on journal entries. So my recommend is that before watching this video, you can watch the journal entry part 1 and part 2 so you get the clarity about the rules followed for debit and credit. However, I will revise here the basic rules, the techniques. So all the accounts can be classified into 5 categories: assets, income, liabilities, expenses and capital. So all assets, by default, it is debit balance. Any increase in asset is debit. Any decrease in an asset is a credit. All income, by default, the balance is credit. Any increase in income is credit. Any decrease in income is debit. Liabilities, by default, the balance is credit. Any increase is credit. Any decrease is debit. Similarly, expenses, by default, the balance is debit and any increase in expense is debit, any decrease in expense is credit. Capital, by default, it is credit balance, any increase is credit and any decrease is debit. So this is the technique or this is the rules you need to understand. You need not apply the golden rules. This will help you to understand how the journal entry has to be passed. Now let's get into the examples. Let's start with the first example. Ram started a new business, invested rupees 1 lakh as capital. Okay. So let's read it again. Ram started a new business. So Ram is starting a new business and invested 1 lakh rupees as capital. So there are two items here, cash and capital. So this is in the books of the business, right? We are accounting or we are recording the transaction in the books of the business. So for the business, there is cash which is increasing because Ram is giving cash to the business. So there is an increase in the asset. So increase in an asset is always a debit, right? So it is debit. Now for the business, it is getting capital from Ram. So Ram provided capital to the business and for business capital is increased, correct? So capital increase is always credit. So this is credit. Okay. And what is the final journal entry we are going to post after this understanding? Cash account debited to capital, rupees 1 lakh to 1 lakh. Second question. Purchase furniture for rupees 9,000. Purchase furniture for rupees 9,000. So here if you see there are two items, right? One is furniture. What is furniture? Is the asset for the company, right? Furniture is an asset for the company. And increase in asset. Asset, if it increase, it's always a debit balance, right? So asset increase is debit. At the same time, the business paid rupees 9,000 rupees cash going out of the business, right? So decrease asset. Cash is an asset. It decreased. So any decrease in an asset is always credit. Next, pay telephone charges for the month rupees 4,000. Pay telephone charges for the month rupees 4,000. Now here telephone charges is an expense for the company, right? Telephone charges is an expense. And what is happening? That expense is increasing or decreasing? It is increasing. So expenses increase is always debit. Expense, it is a debit balance and any increase is always debit. So it is debited. And here also the cash is going out of the business. So there is a decrease in asset, correct? Any decrease in an asset is always credit, correct? So what is the final entry we have now? Telephone expenses, account debited rupees 4,000 to cash 4,000 rupees. Coming to the next question. Sold goods to Bedi and Co for rupees 20,000 on credit. So here there is sales, right? For the business there is sales. To whom? To Bedi and Co. So it is a customer for rupees 20,000 on credit. So here you have to be careful. It is not in cash. It is on credit, right? So what is happening here? Sales, which is income, is increasing, right? By selling the goods, the sales is increasing for the business. So income is increasing. So any income which is increasing is always credit, right? At the same time, as you have not received in cash, so the customer balance increase for the company, correct? which will be converted into cash in near future. So Bedi and Co, or the customer, or you call him as a debtor, increase for the company, right? Increase for the business. So any increase in asset is always debit. Any increase in the asset is always debit. So what is the final entry to be posted now? Bedi and Co, or customer account, debit to 20,000 to sales 20,000 rupees. Now coming to the next question. Bought goods from S.K at the co for rupees 10,000 on credit. Okay. So in the previous example, we learned about sales. Now we are talking about purchase of goods from SK and Co for rupees 10,000 on credit. So here, inventory or purchase or goods is the asset for the company, right? Because by selling this inventory, the company is going to earn income. So these are all current assets. When there is an increase in asset, it is always debit. Correct? Asset is always debit balance, increase is always debit. So here it is debited. Now, whether we paid cash in this case, whether the business has paid cash, the answer is no. Why? Because this is purchase on credit. So when you purchase on credit, you have to create a liability because you have to pay SK and Co, who is a vendor or creditor in future. So there is an increase in your liability, right? Who is SNK? SNK is a vendor, so you have to increase the liability. Increase in liability is always credit, so you have to give credit here, right? So what is the final entry we have to post now? Purchase or inventory account debited 10,000 to SK and Co creditor 10,000 rupees. Okay. Now coming to the sixth question. Payment received from Bedi and Co customer 10,000 rupees. So we have sold goods there 20,000 rupees in question number 4. Now we are talking about payment received from Bedi and Co. So when you receive payment from Bedi and Co, what comes in? We are getting cash, right? When Bedi and Co is paying 10,000 rupees, we are getting cash, and that is increase in asset. Cash is an asset for the business. So any increase of asset is debit, right? So you are debiting cash. Now Bedi and Co, who was the customer for the business, correct? It was an asset. Now because he's paying 10,000 rupees, the asset is decreasing, right? Because he's making the payment. So any decrease in asset is a credit, right? So it will be credit here. So what is the final journal entry we're going to post? Cash account debited 10,000 to Bedi and Co customer account 10,000 rupees. Question number 7. Return goods to SK and Co and received credit note for rupees 5,000. So in previous questions, we saw that we purchased goods from SK and Co, but now, for example, there is some damage and the business is returning back these goods, correct? So what will happen in this case? When you return back these goods, your purchase, inventory, or to track separately, we may create a different account called as return outward, right? Return outward. That means you are returning back to the supplier. Here what is happening? These all are assets, right? Inventory, purchase, all are assets. So asset is decreasing because you are giving back to the supplier, correct? When we purchased, the asset was increasing. Now as you are giving it back, the asset is decreasing. So any decrease in asset is always credit, right? Because asset is debit balance. If you are reducing the asset, it is always credit. So this will be credited. Now SK and Co, who was a liability, who was a creditor and shown as a liability, will decrease because I am not going to pay him for this 5,000 rupees because I am returning back the goods. So liability decreased here, right? When liability decrease, it will be debit. Any increase in liability is credit. Any decrease in liability is debit. So what is the final journal entry we'll have? SK and Co, or you can say creditors account debit 5,000 to return outward account 5,000. Return outward account 5,000. Correct? Assets decrease is credit. Question number 8. Purchase stationery for rupees 2,000. Purchase stationery for rupees 2,000. So stationery expenses here, company is incurring expenses on stationery, and what is going out? Cash. Correct? So stationery is increasing and cash is decreasing because you're paying this 2,000 rupees. So increase in expense is debit, right? Expense is always debit balance. Any increase is debit. So here stationery expense is debit and cash goes out, which is an asset. And assets, whenever there is a decrease, it's always credit, right? So what the final entry will have? Stationery expense account debit rupees 2000 to cash rupees 2000. Now coming to the last question. Goods worth rupees 2000 were used by Ram for personal use. So here there is a trick you need to understand. Goods worth rupees 2000, that means these goods relate to the business. But what is happening? Ram, who is the owner of the business, he is taking these goods for his personal use. So obviously the capital what he has invested, to some extent this is getting, money is going back to the owner. So what is happening here? Purchase inventory account debited, sorry, purchase and inventory is reducing because this 2000 money is going back to the owner, correct? So here the decrease is there, so it is credit. Capital, or you can say drawings, okay, when there is a reversal of capital, we can't debit capital, we have to show drawings. So decrease and it is debit, right? Now, so what is the final entry? Drawings account rupees 2000 to purchase inventory rupees 2000 rupees. Correct. So these are the few examples of journal entries. Next video, I'll be preparing some journal entries on the complex transactions, where we'll try to understand how to identify different accounts, how to apply the rules of debit and credit, and how to derive the journal entries. So keep watching and share these videos to your friends where they can understand the journal entries in an easier manner. And next video, I'll come up with complex examples where we learn how to make transactions, journal entries for complex businesses. Thank you.